Good morning. Today is Friday, May 13th, coming to you live from the road somewhere in Alabama. So it's actually 7:30 my time. I'm with Andrew and Tom. So they're in the front seat here, but we're still here and we're still going. They're pointing stuff out on the road. But jumping into it, we had a volatile day yesterday, but the market is up about 2% this morning. We're getting some good news on COVID in China. Shanghai says victory against COVID is getting closer, which is good news because the China lockdowns have definitely hit a lot of production, especially as you think about Apple. Apple said that it was going to hit them about $4 to $8 billion in their revenue for the June quarter. So it's encouraging that Shanghai is potentially reopening again. In the U.S., however, not such a great story on the COVID front. U.S. cases are on the rise pretty rapidly. I don't expect renewed lockdowns for a number of reasons. Vaccines, therapeutics certainly make the disease less fatal. But also the political reality, I think it would be unfavorable to have a focus on lockdowns going into an election. However, I do expect renewed pushes on the vaccine and potential mask restrictions on airplanes, which could impact air travel demand going forward, especially in light of the higher air travel ticket prices that we've seen over the last month. We were talking about it yesterday. The CPI data came in for the month of April, and prices for airline travel was up 18.5% on a month-over-month basis, which if you annualize that is 700%. I would think that we're probably not going to continue to go up 18.5% month after month after month on airline ticket prices, but that just gives you a sense of the scale at which these airline ticket prices have gone up. And I think that could hurt demand here as we go throughout the summer. Twitter, also in the news today. Elon Musk had been looking to buy the company for a share price of $54.20. But this morning he tweeted, and I quote, "Twitter deal temporarily on hold pending details. Supporting calculation that spam or fake accounts do indeed represent less than 5% of users." So basically saying that he doesn't really know exactly what the true underlying value of Twitter is. And so he's putting it on hold for now. He's still very much interested in the deal, but the stock is falling significantly. When I last checked, it was down 15 to 20%. At one point, it was down 20% or a little below that even, and then it was about down 17%. It seemed like it was basing around that. So Twitter, very much in the news, continues to be in the news, making the news, and all of that. So Elon Musk still very interested in buying the company, but right now the deal is on hold. Affirm, which is a buy now, pay later company, really positive report. And we needed a positive report for one of these fintech companies because we've been getting nothing but bad news for quite some time. It is actually up 26% on the earnings report today. It still remains down 75% on the year-to-date basis. And part of the reason that the stock has done so well this morning, I think, is a bit of short covering. So you have bunch of people who have been betting against the stock and basically thinking that this is going to be a very bad report. It wasn't as bad as people were thinking, and therefore they're going to have to cover those positions, which is helping to push the stock higher in pre-market trading. Their revenue came in a little bit ahead of estimates. Their guidance for the next quarter was roughly in line. The big takeaway I think that analysts are pleased about is the idea that Affirm plans to achieve sustained profitability on an adjusted operating basis by July 1st, but that's not going to happen until 2023. So again, I think that if this report had come out a month ago, you could have actually seen the stock down. But because we've had so many bad numbers, whether it's Square or Block or PayPal or Facebook or any number of these companies, Amazon, Shopify, all of these fintech companies have performed quite poorly, and I think that Affirm provides a little bit more of a relief rally today, and that's kind of a microcosm of what we're seeing in the market. Really, we're seeing some relief rallies in stocks more broadly, and again, part of that is due to where expectations were and some of the news that came out overnight. So Affirm is one of those examples. Another example is Jay Powell. Jay Powell had some comments in an interview with this outfit called Marketplace. I haven't heard of Marketplace before, but the interview is actually reasonably good. And it is being taken as dovish by the markets. And there are some interesting quotes here. The first is that he can do, he's willing to do more or less based on where the data comes in. So for example, and I quote, he says, if things come in better than we expect, then we're prepared to do less. So basically he's saying if inflation comes down faster than expected, then they're not going to raise rates as aggressively. But he also said, if they come in worse than we expect, then we're prepared to do more. So he's going to be data dependent. And if inflation doesn't come down rapidly, then he's going to raise rates more aggressively. Now, you coincide that with the data that we got this week, with the CPI data that came in higher than expectations and seems to be going down glacially rather than rapidly. And I actually think that we're still in this mode where the Federal Reserve is going to do, if anything, more than what is currently priced into the market. And that will only change. My thinking on that will change only if inflation does begin to come down more rapidly, and we're just not seeing that right yet. He further says, I do admire Paul Volcker. I think everyone admires Paul Volcker now, and the point was that what he did what he thought was the right thing to do, and he was prepared to be unpopular for that because he was looking at the medium and longer term. We know that what Paul Volcker did was right in his situation, and it's something like that might turn out to be right here. But I don't think we know that. I think we have a lot to learn about what the path ahead looks like. Essentially, he is saying price stability is the most important thing right now. We can't have a strong and growing long-term economy if we don't have price stability. And I think we would all agree with that. And for that reason, he is going to try to get that down to 2%, that inflation rate down to 2%. If inflation starts to come down to 2% on its own, that's great. But if it doesn't, then it's going to be more aggressive. And so far, what we've been seeing is that it's not coming down very rapidly. Of course, you're in this environment where the market's been especially weak this week. And so these comments come as a little bit of a reprieve for markets, and then you have this self-fulfilling prophecy where and it's just a Rorschach test of where the market sentiment is right now. So we're up pre-market. It'll be interesting to see if that sticks. I'm hopeful it does. It would be nice to have a little bit of a rally to go into the weekend with. But I don't think that Powell's comments represent anything close to a sea change in terms of where he's thinking. And for that reason, I would be a little bit skeptical of this rally for the time being. Hopefully we've hit at least a near-term intermediate bottom in the markets, but that'll remain to be seen. So with that, have a great weekend, have a great Friday, and we'll see you on Monday.